Welcome back to the Dividend Diplomats YouTube channel, everyone. You got Big L, Bert the Hurt. We are pumped to talk to you about some big dividend increases from last week.
Now, before we do, you guys know the drill. Smash that subscribe button, give Bert the Hurt and Big L a thumbs up. We're on the road to 10,000 fans out there. We are cruising over 8,500 subscribers, getting so close to the illustrious WWE dividend-infested Battle Royale.
We cannot wait to do it. We've been practicing. We've been getting some of the WWE impersonations down pat. So once we hit that 5-figure mark for subscribers, you can't wait to follow our newsfeed and see what's about to drop.
So Bert and I are about to dive into some dividend increases from this past week of May 17th. Now, we're only looking at 4 dividend stocks.
Yeah.
2 dividend stocks that grew their dividend and 2 dividend stocks that just reinstated their dividend.
Yeah, and why are we focusing on those last 2 in particular? Because dividend increases are back. We continue to talk to you about that and follow this trend that companies continue to increase their dividend minus AT&T. We've covered that plenty, so please make sure you check that video if you haven't seen it yet.
Yeah, we need to get back to dividend growth instead of future dividend reduction like you saw from AT&T and their deal with WarnerMedia and Discovery. We're all still feeling the pain from that news announcement. I know it's still very popular. I know Jim Cramer is really bashing the current and prior CEO right now.
Yeah, he is not hitting that buy button for this one right now. He is not happy, and it's been interesting following what AT&T has done, just because it's taken a little bit of a roller coaster. High, dropped down after the dividend cut, and it's slowly coming back as people have more time to digest the news and see how it's going to impact their investment decision, which you actually also just wrote about too, Lanny. So
yeah, check out the blog link. Maybe we'll drop it into the description of this video. But yeah, that's why we were both excited to get back to that dividend growth. We researched throughout the articles, throughout the investing news, 8Ks, you name it, to try to find all the dividend increases that happened this past week and those that were actually notable. Companies that you know and understand. And dividend growth is important because if you're living off of your dividend income stream as your main passive income stream on that road, or in financial retirement, financial freedom, you need dividend increases to outpace that inflation mark.
Exactly, because cost of goods continue to grow up. We see it on our grocery bills, our home improvement bills, everything. Costs are going up.
The amount of toilet paper you have to use because there's a little bit more, a little bit bigger.
Yeah, exactly, Lanny. So, I mean, in reality, the thing is, you need to make sure that income's growing, and we have your back with that. So that's why we love bringing you as frequently as we can how many dividend increases happened in the previous week.
It's got your back, we got your back. So
not just me, you got their back too.
I got your back.
Yeah.
I'm Italian. Hey, I'll call my cousin Johnny. We'll take care of you. But to dig in right now, we're going to start in the insurance sector, and this was actually on the video we had for the expected May dividend increases, and finally the dividend increases are starting to really trickle in from that video and blog article.
It has been slow for the month, hasn't it?
It's been fairly slow, steady. You get a couple good dividend increases, a couple notable ones. Sadly, we could make a video all about regional banking dividend increases, but that's not what you want to see. The first one, though, we're diving into right now is Chubb. Chubb, ticker symbol CB. They just increased their dividend by a moderate amount of 2.6% from 78 cents to 80 cents. Bert.
Yeah, it's not the largest increase, and it doesn't beat that April inflation number of 4.2%. However, that is actually in line with their recent growth rate. They are never the highest dividend growth rate. Their 5-year average DGR is 3.09%. So I think that's interesting. They're just a moderate dividend yield at 1.92% with a low dividend growth rate of 3.02, but now with that small 2.6% increase.
Now, they're considered a dividend aristocrat with going on 26, 27 straight years of consecutively increasing their dividend. Consistency is key. Again, we have seen a dividend aristocrat that's soon to fall off. RIP AT&T. But at a 1.92% yield that Chubb is currently yielding after the increase, you're getting better than the overall market at 80 cents per share per quarter, or $3.20 per year. you kind of look at the analyst expectation of $11.52. So, when you do the quick little math there, their payout ratio is so low at 28%, Bert.
And that's why you were kind of hoping you'd see a slightly larger dividend increase for that reason. Low payout ratio, insurance sector has been crushing it for the last year. So you were hoping that they would go above that average, maybe get you a 4 to 6% increase here. But shareholders didn't get that. They got the consistent increase.
Hey, you got a dividend increase. Your income grew. But maybe you may get another one at the end of the year. Aflac, I know, sometimes pulls the dual increases.
We'll find out. They have the room, as you showed and articulated, with that payout ratio. So there's room to grow it if they want to.
Come on, Chubb. You stick to your name. Chubb up that increase a little bit,
I wasn't sure where you were going with that one.
You take it easy here, all right? So, Bert, what's the second dividend stock here?
We're moving out of the insurance sector into the aerospace and defense sector with Northrop Grumman, ticker symbol NOC. They had a very nice, solid dividend increase.
And they'd knock in and out of the park?
They had an 8% increase in their dividend there. They increased their quarterly dividend from 1.45 to 1.57. I don't know if that's knocking it out of the park, but that's not they got at least a double on that one because that's a pretty solid hit. You're in scoring position.
That's a solid hit. I mean, 8% growth. The current yield on Northrop is 1.7%. Pretty good combo, getting close to that 10% overall, mesh between the growth rate and the current dividend yield. So the yield is better than the overall market, and the rate of their dividend growth right there is 2 times inflation.
Yeah, and it's keeping right in line with one of their competitors, Lockheed Martin, who has a 5-year average growth rate of 9.7%. So they're in the ballpark with the industry and where they need to be. So it's nice to see something refreshing like that, where they're just not, I guess I should say they're knocking it out of the park, but it was just a nice increase.
Nice solid increase. Again, 17 plus years of increase in their dividends. So between them, Lockheed, and, then you can't forget about the aristocrat General Dynamics. All of those companies are doing very well. And again, Northrop has that protected dividend payout ratio very low, which means there's going to be plenty of room. Northrop should continue to grow their dividend between 8 and 12% year after year because the payout ratio is only about 26% based on that forward earnings of $24.60.
Perfect. Hey, good stuff there for Northrop. Can't complain. Let's move into the next two because they're kind of going to be in the same spirit here. We're moving into the retail sector where
retail is not dead?
No, it's not. We covered this earlier. What was it, a few months ago we released that video, Lanny?
We did. We're bringing back the industry. They're really showing some sound reinstatements here. Yeah,
and there was a big wave when we produced this video, and now we're seeing 2 other retailers that have just reinstated their dividends. And that's the exciting thing here. This first one is Ralph Lauren, ticker symbol RL. And this was really the big one here because they reinstated it. They haven't paid a dividend since the pandemic. So they haven't paid it over a year. Shareholders have been eagerly waiting for that dividend to return.
Edge of their seat waiting for it.
Yeah, I say, let me scoot up here on this. I'm kidding, I'm not going to. But what was huge was they reinstated it back to that pre-pandemic level. So shareholders are going back to where they were before the pandemic. That quarterly dividend is 68 cents and 0.75. So that's exciting. They have a 2.2% dividend yield after that announcement. So great news for Ralph Lauren shareholders.
And for Ralph Lauren shareholders and for potential new shareholders out there. Their forward earnings are looking at about $6.50. So that payout ratio is in that perfect spot of 42% based on forward dividend plus that forward earnings expectations.
There it is. So congrats, Ralph Lauren shareholders.
Hey, if you're wearing their clothes, look down, give yourself a thumbs up, pat on the back, and add that stock to your portfolio.
Yeah, exactly. So the fourth one, though, Limited Brands, ticker symbol LB.
LB.
Yeah, there it is. But they reinstated their dividend from the pandemic too. So very similar to Ralph Lauren in the spirit. But there was one caveat.
What's the caveat?
They didn't restore it to pre-pandemic levels. They restored it to 50% of the pre-pandemic level. So only 15 cents per share per quarter. So hey, not the best. Maybe I should have started with that one and then hit it with the Ralph Lauren in the number 4 spot.
Started off with the worst of the 4.
Yeah.
But Limited Brands. Now, Bert, where is this company based out of?
Columbus, Ohio.
Columbus, Ohio. So guys, we'll say it again. OH.
IO.
Give it a like if you're from the state of Ohio. We really appreciate it.
Mr. Wexner's proud. His baby right there.
This is baby. So the current yield, though, you were saying it's below 1% right now?
Yeah, it's at 0.9%. So because they didn't restore it to that 100% pre-pandemic level, their yield is now below the S&P 500. If they would have done it to their pre-pandemic level, it would have been obviously 1.8% because it would have been double.
Now, and I know that there's been talks too within this company for some brand sell-offs potentially.
Yes. So there's a lot of moving parts, and that probably has a major play in why it's only at 50%. Right. They're shaking things up, so they need time to figure out the cash flows, what company is going to get what, well, who's going to get where the cash flows are going over here. So, hey, who knows? But it's better than the dividend you were receiving from Limited Brands last week. So now, congratulations.
I think the main point, the main takeaway here for all the viewers is that, retail, again, you would think that this industry is just bad during this time period, but this is not the recession that we had. I know consumers are spending money like crazy right now, literally. Go to your store and you'll notice it. Go to your parking lots and you'll see it. Limited Brands, a lot of online shopping can be done. So this is really showing that retail isn't officially dead, that there are some sound and safe companies out there, because they wouldn't be reinstating these just to pull it back again right away. The yin and the yang.
Yeah.
I don't see the yo-yo happening.
No, because once you cut it, you might as well just wait to reinstate it until you feel confident to that point.
There's a few companies that have cut it that haven't brought it back yet, probably because they're like, we don't want the yo-yo effect.
Exactly, Lanny. So I think it's a great point to point out. So keep an eye on retail companies if you own them and you haven't received your dividend increase or reinstatement yet, because you may be getting it soon.
So, in summary, you had Chubb, ticker symbol CB, with a nice solid 2.6% increase. You had Northrop Grumman with, what was that increase, Bert?
It's an 8% increase.
Yep.
Then you had Ralph Lauren, who reinstated it to its pre-pandemic level. And then you had Limited Brands, who reinstated their dividend to 50% of their pre-pandemic level.
Or 15 cents, per share per quarter right now. So guys, what increases did you receive this past week? You gotta let us know here, because we want to know which ones were notable to you, so we can remember going forward kind of what our community is looking for. I don't own any of these companies here.
Yeah, I won goose eggs this week, but we want to make sure we're still bringing them to you.
Hit an offer, but it's okay. We'll be back in the ring to hopefully have a few more stocks on our side here.
And if you haven't already, just give our channel, this video, a thumbs up. Subscribe to our channel below. Again, get us to 10,000, please. We're asking you for your help.
Again, this was Bert and Laney from the Dividend Diplomats.
Over and out.